And welcome back to Yahoo Finance on the Move. We were expecting to have the big hearing before Congress of the big tech CEOs. That had to be postponed because of the memorial for John Lewis. But we're still going to have that later this week. And to help us understand what is on the line, we want to invite into the program a friend of ours from Vontable. We welcome back to the program Peter Choi, Vontable Quality Growth Senior Research Analyst. He's joining us from Fort Lauderdale, Florida. One of the things that stands out as we go into this is just Google or Alphabet and Amazon, Facebook. They are huge. I mean, when you look at the market cap of the big five, you're looking at over $5 trillion. Is this something we should be worried about? Congress seems to be.
Yes. Thanks, Adam, and thanks for having me. I think you sort of wrapped it up in a nutshell in that, it is relatively unprecedented, to have this few number of companies, become and have such a large impact on the economy. I mean, it used to be the 1 trillion mark was quite a feet, and now we have several of those. Part of this is because we're in a more digital world, and these are truly global companies. So the accessible market is maybe greater than it was. But I think this does sort of set the backdrop for what we've seen, in the past year in particular. We sort of see two separate paths in terms of antitrust investigation. One is being spearheaded by the FTC and DOJ. These are the traditional enforcement arms and looking to see if there's anything going on in terms of existing law. And then this hearing that we're all looking forward on Wednesday. The House committee is really overlapping to a very certain extent, but also maybe having an eye just in terms of is there anything in terms of the competitive playing field or the nature of these companies where should we start looking at maybe tweaking the actual anti-competitive laws a bit further to adjust.
Well, Peter, it's Julie here. It's good to see you. As an investor in some of these companies, I mean, what's the investment risk? What probability are you putting at the idea that we would see a rewriting of antitrust law to broaden the scope of what these companies are perhaps not permitted to do? And so what's the probability? And then how bad would the effect be on these companies if that were the case?
Yes, I mean that's a great question. I think from our perch currently, I think we're really in more of a wait and see type of mode. I think if you look at the topics that have really come to the forefront for a lot of these companies, these really seem to be issues more at the margin. So I mean, if you think about the core of antitrust law, it's not illegal, it's not forbidden to become a dominant company or a monopoly. It's more about the way you obtain that dominant position, and do you misuse that to sort of gain leverage in an adjacent market. And I think if you look at a lot of these issues, for example, like Apple, there's been some more news about the way they control the App Store. I mean, if those get tweaked, does it really fundamentally change the attractiveness of Apple's franchise? Not really. I mean, it may have a slight profitability impact. And you can sort of go down the line. If Amazon has to do something a little bit different in the way it sort of develops its private label products, I mean, that's a very small piece of the business. It doesn't really speak to its core competitive advantages in terms of logistics or service and breadth of offerings. I think if you were to highlight one, certainly one topic that's come to the forefront a bit more is the role of M&A. And I think just given where these companies are, it's certainly going to be harder to do any kind of significant M&A, although I think most investors have generally conceded that point already.
Peter?
So, yes.
When you say that, though, look, I mean, you sent us the cash on hand estimates, just Apple almost $200 billion. And then there's a metric that it's not as if these companies are going to get smaller. If only 4.6 billion people on planet Earth have access to the internet right now, that means roughly 45% are still a market to be grabbed by these companies. They're going to get bigger, not smaller. And is Congress going to want to get in the way of that?
Yeah, I mean, I think once again, there's no law against becoming successful or becoming big. It's really the nature of the competition. And I guess just sort of stepping back and looking at the history of technology and the history of antitrust. I mean, I do think what you see over time is these dominant franchises arise. I mean, you can go back to IBM and the mainframe. You sort of had the desktop PC era, and then you had maybe smartphones. And so at one point, these companies look, very threatening and dominant, but you do reach a point of maturity. And, the way tech generally evolves is you do sort of expand, and eventually something else becomes a center of gravity, and that becomes bigger. So I think really the role of antitrust, I mean, particularly if you look at the history of tech, really shouldn't be to sort of break apart existing franchises necessarily, but really just keeping an eye towards making sure competition is available when new markets do arise.
And Peter, finally, just to pivot for a moment, I know you all hold, what is it, Alphabet and Amazon, I believe, of these large cap tech stocks. Is there anything they're reporting now, both after the close on Thursday? Is there anything they could say in those reports that would derail the rallies that we have seen in these stocks? Is there anything you're worried about?
Yeah, I mean, I think looking at those two companies specifically, I mean, we'll probably see a continuation of a lot of the trends we saw on Q1 earnings. I mean, looking at Alphabet, you did see a near-term hit to the advertising side of the business, but search does appear to be pretty resilient, and you saw a pronounced recovery over the pace of Q1. Amazon, obviously, the core businesses are generally aligned with the tailwinds going on right now, so those are largely firing on all cylinders. Just taking a step back, we've already seen it with earnings reports in tech last week. Coming on the heels of a pretty substantial rally in Q1, there might be an element of the stocks just needing to take a breather for a bit, particularly if you see further opening up of the economy and some other laggards maybe catch up. But really, we view that more as sort of a healthy near-term type of breather, and certainly view these as core holdings for any kind of multi-year period.
Peter Choi is Vontable Quality Growth Senior Research Analyst. We appreciate your being here. We're going to be watching those hearings on Wednesday with the big tech CEOs.